Gurpreet, not the sort of tone to the news and the data that the government would want to end the year on, albeit is a marginal downgrade to the GDP figure.
No, it's definitely not the tone that the government want to end the year on. I think what you saw in those clips ahead of me was a bit of a political blame game going on between the major parties. You heard the Tories say that Labour inherited the fastest growing economy in the G7. Output increased by 0.7% in the first quarter, 0.5% in the second quarter. We had a big rebound out of the recession that we fell into at the end of last year. But I think that disguises another reality, which is what this data shows us for Q3, is that that recovery that the Tories speak about was actually running out of steam before Labour really got going. Now, this is for the third quarter of the year. It's from July to September. It's before Labour introduced their budget, which included that big increase in business taxation. And what we saw in Q3 really was a big drag from interest rates, higher interest rates, which were still working their way through the system, as well as a slump in trade. And so I think it's fair to say that these results wouldn't have been materially different had the Conservatives been in power during the majority of Q3. But what will make a difference looking into the future, of course, is Labour's budget. It was a big budget, big tax, big spend. It included about £25 billion worth of tax rises on business. And at the time, businesses were telling us that this was going to be painful, that this was going to hurt their performance, that it was going to create a difficult trading environment. And we're starting to really see evidence of that now. Business groups, including the CBI today, published a report which suggested that output is falling, that businesses are going to have to cut back on hiring, and that their output is down. They called it the worst of all worlds. And business groups, they kind of periodically put these surveys out to give us a sense of how businesses are feeling. And in this particular survey, it was the worst performance since the aftermath of Liz Truss's mini budget. And we've got more kind of official evidence of just how painful it is. In October, the ONS released their GDP data, which showed that the economy was shrinking. It shrank by 0.1% in October. So it's not looking good for the 3 months to come either, Wilf. And actually, the government will have avoided a recession before the end of the year. That's 2 quarters of negative growth. But what all of this evidence is pointing to is the fact that the economy is stagnating. And we're starting to kind of see how this is affecting policymakers at the Bank of England. The Bank of England on Thursday, for example, decided to keep interest rates on hold at 4.75%. Now, normally when the economy is struggling, the bank might be tempted to cut interest rates to kind of boost the economy. However, we've also got inflation that's above target, 2.6%, underlying inflationary pressures in the economy, including higher wage growth than the Bank of England would like, meaning that they're quite constrained in how much they can act to boost the economy because they're worried about inflation. So very much the worst of all worlds, Wilf.
Gurpreet, great stuff. Thanks so much for that, Gurpreet Narwan.